With the S&P 500 reaching a new all-time high, it is becoming hard for investors to buy good companies at a reasonable price. Indeed, many stocks have witnessed skyrocketing levels just recently. Even if my investing strategy is built on dividends, I like to see that the stocks I bought are on the green. If I had to sell a portion of my portfolio, I would like to sell with profit. So the stock price at which you buy a stock contributes a lot to the wealth you could accumulate on the long run. I made my research and I came across 4 companies that are very interesting to buy today. These companies offer a decent dividend yield, an even more decent dividend growth rate, and more importantly are not overvalued right now. On the contrary, these companies could offer a substantial price appreciation. So let's dig into it. Stock 1. Lowe's. The company provides a variety of products for building, maintenance, repair, renovation and decorating. It also sells home remodeling items such as appliances, seasonal and outdoor living, lawn and garden lumber, kitchens and bathrooms, and much more. Home improvement sales in the United States were approximately $540 billion in 2021 and are predicted to exceed $620 billion by 2025. The North American Hardware and Paint Association (NHPA) likewise has high expectations for the home improvement market, predicting 4.6% compound annual growth between 2019 and 2024. This is one of the reasons I think Lowe's is a good company to own for the long term. Dividend yield, 2%. Dividend safety, 93. Dividend growth, 24% per year in the last 20 years. With this rate, with a $1,000 initial investment, you'll get $173 of dividends in just 10 years, that's 8 times what you will get in the first year. Dividend growth streak, 63 years. According to analysts, the stock could reach $254, which represents an upside potential of 15%. The stock has recently touched the $221 support area. I would personally wait for the $191 area to buy the stock at an optimum price. I'll wait and see. By the way, you can follow me on X or Twitter as known before. I share some swift stock price analysis about the stocks I follow. It can help you optimize your entries. I put the link in the description of this video. Stock 2, Home Depot. The Home Depot Incorporated is the world's largest retail home improvement and construction supplies company, with over 2,300 locations in the United States, Canada, and Mexico. The founders of the Home Depot identified a need for a one-stop home improvement store and filled it with tens of thousands of products and a knowledgeable sales team that could help consumers on their home improvement projects. It expanded through low prices, word-of-mouth recommendations, acquisitions of companies that added items and increased sales, and a commercial drive outside of the United States. It eventually became the world's largest home improvement company, generating $153.7 billion in revenue in fiscal year 2023. Dividend yield, 2.74%. Dividend safety, 87. Dividend growth, 19% per year in the last 20 years. With this rate, with a $1,000 initial investment, you'll get $156 of dividends in just 10 years. Dividend growth streak, 36 years. According to analysts, the stock could reach $383, which represents an upside potential of 17%. The stock has broken just recently the resistance area around $327. For me, the next major support is around the $271 area. Still, for those who aren't willing to wait, I think the current price offers a good combination between dividend yield and price appreciation potential. Stock 3, AbbVie. While the branded pharma sector is highly cyclical due to the transient nature of patent protections and the obstacles associated with commercializing new drugs, AbbVie has strong visibility for the next decade and a considerably more diverse portfolio than a few years ago. Dividend yield, 3.91%. Dividend safety, 80. Dividend growth, 14% per year in the last 10 years. With this rate, with a $1,000 initial investment, you'll get $146 of dividends in just 10 years. Dividend growth streak, 100 years. According to analysts, the stock could reach $186, which represents an upside potential of 17%. AbbVie is now around $159. There is a huge trend line that started in 2020 and the price when touching this trend line will be around $147. For me, this is an excellent price to get the stock at. Stock 4, Stepan Company. Stepan Company manufactures and distributes specialty and intermediate chemicals to other manufacturers for use in a variety of final products globally. It operates in 3 segments: surfactants, polymers, and specialty products. Dividend yield, 1.73%. Dividend safety, 99. Dividend growth, 10% per year in the last 5 years. With this rate, with a $1,000 initial investment, you'll get $44 of dividends in just 10 years, not the highest amount among today's stock picks, but still, that's 4x in just 10 years without even considering reinvesting the dividends. Dividend growth streak, 57 years. According to analysts, the stock could reach $104, which is about a 19% upside potential. Now have a look at the stock's chart. Stepan is flirting with a descending trend line. It will likely fall further for the short mid-term. The next major support is at $73. I would be patient to get it at that price. This is it. As I said, have a look at my X account. I post some technical analysis about the levels I'm watching. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.